Welcome, everyone, and especially to our speaker today, Simon. As you saw from the invitation, a new report called People's Money, Harnessing Digitalization to Finance a Sustainable Future has been released by the UN Secretary General's Task Force on Digital Finance. It sets out an ambitious but practical action agenda and spells out how digital finance can be harnessed in ways that empower citizens in envisaging a digital transformation at scale that better aligns people's money with their needs. Simon's going to talk us through some of the key elements of the report today, and then leave time, as per usual, at the end for us to ask questions and for us to discuss. As per usual, either put up your hand to ask a question, please put a question in the Q&A box or in the chat, and we will come round to you, but I much prefer you even ask the question in voice. I'll be able to unmute you to do that. Good, Simon, let me hand over to you.
Gavin, thank you very much indeed. Gavin, every now and then I need you to nod to confirm that anybody can hear me, because I've got a slightly dodgy bandwidth today, and I take no pleasure in talking to myself. Thank you very much for the invitation, and as I understand it, from many different countries, but with a profound interest and knowledge of digital money or digital finance. I'm going to actually kick the process firstly with a short video, if I may. It just sort of covers, if you like, one or two number of slides, like 3 or 4 slides, just to drill down in 1 or 2 particular areas, and then I'm going to stop. So although Gavin framed this as towards the end we'll have time for chat, I'm hoping that towards the beginning we'll have time for chat, because I'm going to get through this all pretty fast. So with that, Dougal, let rip on the video. Dougal, if you would.
We're at a fundamental crossroads. Digitalization can advance us more rapidly in achieving the Sustainable Development Goals, or it can deepen exclusion, divide us further, increase inequality. The choice is ours. For the first time, digital technology can put economic power into the hands of people, the people that own today's global financial resources. What if every citizen was empowered to make financial choices that support the SDGs and was able to ensure that every last dollar was spent on what really matters to them, family, community, their country, and the planet? Let's put citizens in the driving seat by enabling them to use their savings to finance their long-term development. Increasingly, mobile platforms and data analytics are bringing sophisticated financial services to mass markets. Governments are digitalizing public finance, whilst a third of US public equity trades are now being carried out by computer-managed funds.
Digital technologies, which are revolutionizing financial markets, can be a game changer in reaching our shared objectives.
The UN Secretary General invited 17 global leaders from around the world in areas as diverse as financial regulation, policy, financial technology, financial institutions, and other experts to form a task force to consider how best to harness digitalization in advancing financing of the Sustainable Development Goals.
We have not begun to understand quite how transformative much of what we refer to perhaps as digital finance or fintech will be in the years to come.
What we've been tasked with is to look at digitalization and to try and understand how digitalization can be used and can be harnessed to finance the SDGs.
Today, they have completed their task, prepared a report that includes an ambitious action agenda that will fulfill the mandate that was set to them.
Here in Zimbabwe, 90% of the adult population is already registered on eCocash, the mobile money platform. Because of this deep penetration, it enabled us to retool, repurpose rapidly during this COVID-19 crisis. Employers were still able to pay their employees while they were still at home without incurring any additional fees. We also launched a COVID digital insurance, where anyone who held insurance and came forward for testing, and if they tested positive for COVID, immediately received a $5,000 payout.
Our Pathfinder initiative, the Digital Governance of Infrastructure Initiative, or as we call it, Infrastructure 360, enables investors, governments, citizens to have a complete view of nearly every piece of information about infrastructure projects globally. This will enable governance, but it will enable more funding to go to the right type of infrastructure projects to support the SDGs.
We are channeling domestic micro savings into mega investments and then using blockchain to track accountability of these funds. This would offer domestic micro savers a choice of project that they will invest in, such as particular roads or bridges, sanitation systems, or hospitals. This approach would deliver significant reduction in the cost of capital as well as economic multiplier effects as dividends flow to poor Bangladeshi citizens.
All of these solutions require better digital infrastructure, enhanced capabilities, and universal access. Defenses are needed to ensure against cyber vulnerability, fraud, illicit financial flows, and algorithms that can discriminate against particular groups. Digitalization needs to enhance the alignment of finance with the SDGs rather than, for example, increasing short-termism or market concentration. Realizing these solutions, overcoming barriers, and mitigating risks requires concerted actions by many different actors, by policymakers and financial regulators, by financial institutions in the markets themselves, including new fintech innovators, by development institutions operating at both the national level and the international level, as well as standards makers, experts, and civil society actors. Just as today's crisis has pushed us to take greater advantage of the digital world, so digitalization can help us to better align financing with the Sustainable Development Goals.
Thank you, Dugu. There were moments where I think lip reading was required to match the sound very well. Thanks very much indeed. So I'm almost tempted to kind of stop the presentation there and already begin the discussion, but actually I'm going to not completely follow that, but I'm going to go sort of back one or two generations in presentational methodologies and offer you kind of a few slides with some comments by me just to go sort of one level down into what the task force has been looking at. So Dugu, if you could tee up the slides, that would be really great. I am hoping. Dugu, are you able to put up the slides? Mm-hmm. Okay. Dugu?
Apologies, Simon. I'm having a technical issue. Just a second, please.
Okay. Just 2 seconds and we'll be there.
While we wait, just to answer a question, yes, we will be sharing the recording afterwards, per usual, both in the League and in the Knowledge Center on DFI's websites.
Dugu, shall I share it from my side? I have them up and running.
Simon, that will be great. Apologies. I'm not able to connect.
I apologize. No problem at all. Let me see if I can get this going. Okay. Is that any better? Hopefully that's going to work. Gavin, is that visible?
That looks great.
Fantastic. Okay, so let's see if we can run from here. Okay, so this task force, was under the United Nations Secretary General, kind of a bunch of actors from all around the place. You may recognize Brad Kutsayama lurking down there in the middle, famous through his write-up in Michael Lewis's Flash Boys. He was the guy that bombed out of the Royal Bank of Canada and set up IEX, the alternative trading platform, to try and reduce what he considered to be unfair advantage that high frequency the central bank governor of Kenya and of Samoa. You have other folks from the UN. You have leaders of major financial institutions, Piyush Gupta from DBS in Singapore, and also Eric Ying, the executive chairman of the Ant Group, I guess what we would consider to be the world's largest sort of pure play fintech company. So an interesting bunch of people with an interesting bunch of perspectives. And what we were trying to figure was kind of what happens when digitalization disrupts and changes the nature of finance and money, which is a hard enough question to answer in itself, given the complex dynamics and uncertainties involved, and how best can we harness digitalization to increase the alignment of financial flows with sustainable development outcomes. We focus perhaps slightly unusually for a UN piece of work, not on grand theory or great governance innovations, although, Gavin? Hello?
No, I was just suggesting we stop your video,
hello?
Your bandwidth or my bandwidth, that I'm not hearing you too clearly, but I've stopped your video now, so let's see if that gets...
So not to use the slides, is that what you're suggesting?
No, continue using the slide, Simon, just not sharing and not being on camera.
Got it.
Continue.
Got it. Okay.
Still with us, Simon?
Okay. Not working so well. All right. So, Gavin, do I need to about the slides?
You should be able to share them again, Simon.
Okay, but I've done it 3 times, and each time the voiceover disappears, right?
No, if you share the slides, you should be fine. It's just your video, your camera, which I've switched off in any case.
All right. I'll try again. Can you hear me now?
Yeah. We can hear you now, and we can see your slides.
Fantastic. That's great. Thanks very much, Gavin. So, unlike perhaps many other UN task forces and pieces of work, we focused on the opportunity side in the first instance and identified 5 areas where we feel that digitalization can be more effectively harnessed in addressing very large scale financial flows and aligning them better with sustainable development outcomes. I'm not going to go through each and every one of these, but will, if you like, illustrate the points in 1 or 2. I think probably most of them are relatively clear from the slide in front of you. Over many decades, the development puzzle in many developing countries has been about borrowing money from international capital markets, perhaps cheapened through concessionary finance, and channeling that into long-term development finance, and in particular development infrastructure. Clearly that has only worked to a very limited degree and has left many developing countries in a very poor financial state. notably with high international debt levels, vulnerability to forex shifts and shifts in international capital markets that are not of their own making, large outflows of finances to pay for the debt that's been raised and so on. Over the same periods, over the past 20 years, domestic savings has increased threefold globally to $23 trillion a year, more or less, and has increased fivefold in LDCs, so the world's poorest countries, although obviously not in every LDC. And so we focused significantly on how digitalization can support the more effective channeling of domestic savings into long-term development finance in the countries in which those savings are being put aside. The case of Bangladesh, which Anir Chowdhury in the video attested to, is very interesting, where we did the calculations on what the gains to Bangladesh would be of moving significantly away from tapping international capital markets and tapping domestic savings more effectively, despite weaknesses in the domestic financial system. And those savings were and could be considerable. 20% reduction in the cost of capital overall for a typical infrastructure build over a 10-year period. The flow of dividends, of course, not to JP Morgan or the World Bank or the Chinese government, but to individual Bangladeshi citizens, which of course delivers both an economic multiplier effect and an equity effect if those savings have been aggregated through mobile devices from often some of the poorest citizens in Bangladesh. And of course, the ability of individual citizens to choose. So if I'm a Dhaka taxi driver, saving through my mobile devices into an investable fund, which then flows into infrastructure investment, although I'm a small piece of my money to be invested in a hospital at my bridge that I have to drive across as a taxi driver 30 times a day and would benefit from if it was in better shape. So you begin to centric choice, even thinking about very large scale infrastructure investments such as bridges, schools, hospitals, sewage works, and so on. Each of these 5 catalytic opportunities, it seems to us, is in the multi-trillion-dollar-a-year space. But clearly, there are constraints in advancing each and every one of them. And I'll come back in a second to describe those. Now, how can I move on? So the 3-part action agenda of the task force, on the one hand, was those catalytic opportunities that I've just highlighted on the previous slide. So top right of the top left of the slide you're looking at, and then top right of the slide that you're looking at are a set of recommendations that really attest to how you build out digital finance ecosystems Digital Finance Alliance, which is a public-private partnership based in Geneva. During the course of the 18-month work of the task force, developed, I think, a very simple and really useful one to map at a national level the degree to which fintech innovations, if you like, small scale or larger scale, are aligned to national priorities in that country. It's one thing to point to big fintech communities that are emerging and interesting digital innovations, if they're all geared to aid consumers to improve consumption in some unsustainable way or increase fossil fuel use. It's another thing if some of those fintech innovations are really geared more centrally towards a more inclusive, more sustainable, low carbon, climate resilient economy. And so the tool that they developed allows a kind of matching process against the SDGs and national priorities on the one hand, and the degree to which the domestic sort of digital finance ecosystem as it evolves is really beginning to align to what those national priorities are. Focus on international governance, so rising above the individual national level. You may have noticed over the last couple of days, there's been over the last few days quite a lot of stuff about big tech, including, of course, the report out from the US Congress, really not quite calling for the breakup of some of the large big tech companies, but certainly raising profound questions about their monopoly and otherwise practices in the market. But as part of that big tech community, we can begin also to identify what we might call a big fintech community. These are often coming from social media platforms or coming from e-commerce platforms, very occasionally coming out of the existing financial community, but in a sense are the next generation of large-scale incumbent financial institutions with huge, potentially global and cross-border spillover effects. You know, think of Libra as a case in point. You know, if Libra had come into existence in the way in which Facebook had originally envisaged, its penetration into many smaller developing countries, but also just smaller economies, on the one hand, may well have delivered upside development advantages in terms of reduced costs of cross-border remittances. But on the other hand, much like the dollarization of an economy would gradually have stripped out monetary policy control, industrial strategy, macroeconomic strategy, gradually, in a sense, sort of slaving the domestic economy into a kind of broader system that is geared to an exchange rate of 1 in the case of the dollar with the US dollar, in the case of Libra with a set of other currencies. And so this doesn't make it necessarily the fault of a Facebook or a Libra, but it clearly illustrates that these large, big fintech initiatives and platforms and companies that are emerging are going to have very significant sustainable development impacts well beyond how they understand the course of their traditional business, which is at the financing level per se. And so the third part of the recommendation space is around this challenge and what it takes to move beyond regulation largely driven by 2 or 3 major financial regulators and central banks like the Fed in the US, the ECB in Europe, maybe the BOE, perhaps the PBOC in China, and to move into a broader approach to governance that brings many other actors to the table, particularly from LDCs, but also brings a broader development agenda into the policy and regulatory space, whereas central banks really think primarily at that level in terms of, say, traditional forms of financial stability and obviously money laundering, both very important in themselves, but by no means the only part of the story. So those 3 levels of work fitted into one action agenda, and then, if you like, sort of linked into things that the UN is already doing, but by no means only pointing to what the role of the UN is. So if one goes on to the task force website, one sees very quickly there's the report, there are briefings in multiple languages, but also specific documents referring to what we believe individual sets of actors should really take from the action agenda as things they need to take forward, whether they be central banks, whether they be development finance institutions, whether they be small fintech startups or larger financial institutions. We think there are roles for all of those actors, both individually and together, in taking forward the work we have set out. With that, Gavin, I'm going to stop, kind of switch off the machine, and maybe pass back to you, if I may, Gavin, to kind of moderate us through the second half of the hour.
Yes, Simon, thank you so much. Both the video and your presentation has a few questions, have raised a few questions in my mind. There was a hand up. Let me just check with Gideon if he wants to still ask his question before I jump in. Hi, Gideon. Did you have a question for us? Oh, I see. You mistakenly pressed your hands up button. Okay. Let me jump in and ask a couple of questions, Simon, to get the conversation going. And then also look to those on the call to please raise your questions for us, either in the Q&A or the text box, or just raise your hand and I'll unmute you. Simon, you know, one of the first questions that came in mind is, what is the ask here? Is this another round of financial inclusion or another angle to financial inclusion? Is this, you know, is the ask more branchless banking? You know, what is the ask? You know, how much further than what we've been doing over the last 2 decades does this take us?
So I think firstly, we need to get our head around, you know, the breadth and depth of what we might call global finance. So some of our recommendations do refer to areas that we have traditionally placed under the rubric of financial inclusion. I think probably the recommendation focused on, you know, a more rapid development in algorithmic lending for SMEs is a kind of case in point. But most of the recommendations go well beyond that in touching on aspects of financial flows that really kind of break away from that sort of retail, individual, small scale level. If you think of the way in which large scale data sets, particularly with spatial location as it relates to environment, particularly biodiversity, can change the way in which 185 trillion US dollars worth of capital markets can or can't take a range of different SDGs into account. That's certainly not something that we would have traditionally thought about in the context of financial inclusion. If we think about, you know, the example I gave for Bangladesh, you know, which is to reconfigure the relationship between the smallest level of possible savings, so micro savings, the 20 US cent saving chips, and large scale long-term development financing. Of course, that touches on the individual, if you like. So one thinks of that as something to do with financial inclusion, but really it's breaking down those Chinese walls between payments platforms, localized small scale savings, and the way in which capital markets and public finance has operated in the past. And that breakthrough involves the reconfiguration of many aspects of the way global financial and capital markets work, many challenges to the way in which many financial intermediators today in markets operate, and challenges that, if successful, would either drive them out of business eventually, or would nudge them or provoke them or pressure them into improving their offering in terms of intermediating the world's savings and financial assets with uses that are really relevant to the long-term needs of the ultimate owners of wealth, which is us, individuals. And then in the public finance area, again, an area that we know a lot about, but not so much in the context of digitalization and financial inclusion, we are able now, and we do in some countries, you know, register a single cup of coffee that a minister of government buys and charges to the public purse, yeah, logging it on a website in terms of what that product was, how much it cost, when it was bought, and where it was consumed. Now, we can do that down to the individual cup of coffee, and yet we're still faced with large-scale corruption across many, unfortunately, public financial systems, significantly because those levels of transparency have not been achieved. Yeah, so what that points out, again, one of our 5 catalytic opportunities, is that there is a need to dramatically ratchet up the level of transparency and accountability of public finance if we want to take financing of the SDGs seriously. Public finance accounts for something in the order of 20% of global GDP. So it's no small figure, and getting that number wrong or directing it in the wrong way or allowing the continuation of large-scale leakage is something that digitalization can help to overcome. But of course, there are many resistors, if you like, in its effective adoption. Finally, You know, does that mean we've got beyond financial inclusion? Well, I hope, Gavin, the answer is obviously yes. But what does that really mean? It doesn't mean we've got beyond the role of the citizen. Quite the reverse. The central message of the task force is that digitalization won't play an upside role and may well play a significant downside role in aligning finance with the SDGs, unless it is part of a pathway of empowering the ultimate owners of the financial wealth of this planet, you know, which is citizens as savers, investors, insurers, policyholders, taxpayers, and voters. So I think citizen-centric finance, if you like, is the next logical step to financial inclusion and takes us well beyond that poor individual at the end of a pipeline benefiting from improved financial services to a far more empowered citizen, much more active in the way in which money is used globally.
Mm. You know, so if I think about investing, well, one of the, I'm going to, you know, jump to a later question that I had for you, since you raised corruption and the leakages of funds. You know, one of the prospects that you talk about is tapping into the world's savings. And tapping into the world's savings by empowering pretty much every individual to invest in everything from an infrastructure project to anything aligned to the SDGs. It's incredibly visionary and exciting. It almost feels like Valhalla. But you know, how, when we're talking about the poor's savings, is transparency through digital systems going to be enough? Who's going to be the watchdog? Because it's not the poor person that uses a little bit of their savings and doesn't see a dividend because it's been leaked or misappropriated, etc. Is that what you see coming out of the regulatory stream on this? Is, you know, how do we make this, how do we make transparent digital systems monitored? You know, who monitors them?
So let's break it up into some bits. So firstly, hopefully it is visionary, hopefully it is compelling, but it's not abstracted from reality. You know, so today, if I'm in China and I'm an Alipay user, I can take 1 RMB, 20 US cents roughly, and I can invest it in a money market with a 1-second entry and a 1-second exit availability. Yeah, and I can watch on a microsecond basis what that 1 RMB is doing in money markets and how that's affecting my wealth. Equally, I can take 1 RMB on the same platform and invest it in a long-term green growth fund. Yeah, one that, of course, is subject to all manner of different possible forms of corruption and rent taking and so on, but is, you know, a licensed fund, yeah, with a degree of oversight by the platform owner, the Ant Group in this case, and with a view as to what the long-term financing possibilities are to advance the green economy in China. Yeah, so that's model one. You know, model two, Kenya. You know, so Kenya is the world's first country to launch, you know, a government bond that can only be subscribed to by Kenyan citizens through their mobile devices up to $30 US a shot. Yeah, and so we already know, and there are many others in the pipeline and some others that have progressed since the Emakiba. There are, you know, so we know, if you like, in the first part of the segment, how to move money from micro savings through mobile devices into various kinds of savings products that in turn interface and can create investable pools of capital for a whole range of different purposes. But then the next part of the story is how the money is used. Yeah, and clearly, you know, there are all manner of opportunities for those funds not being used in the way in which they should, either at all or inefficiently. And so again, digital at least offers an opportunity in which to try and unbundle what is a very obscure, untransparent financial flow space, which is financing of project infrastructure. And there, whether one uses blockchain or other mechanisms, there is the possibility for higher levels of transparency. And there are the possibilities through that of high levels of accountability. Now let me jump to sort of two other points and then Gavin, pass it back. Firstly, I totally agree with you that the future world on a plus note will not be made up of 7 or 8 billion people all holding every dollar used to account every minute of the day, whether they be rich, middle class or poor. So I'm totally of the same view as you. This is not an atomistic view of the way in which accountability can work. But of course, we know how to create collective processes and collective approaches to holding financial institutions and governments to account, whether it be churches, whether it be credit unions, whether it be trade unions, or many other mechanisms of what are far more intermediaries that represent members' interests, i.e. the interests of citizens, in ensuring that their money is used effectively. So first point is, I don't think this is an atomized process, although I think there are opportunities for those perhaps that are somewhat more educated in financial matters to be able to make choices as well. In the European Union, there is legislation on the books, for example, that requires every pension fund licensed across Europe to inform pension policyholders adequately as to how those pension funds are being used, what investments they are making. Now, I would argue that that is a correct piece of legislation with very low functionality and impact at this point, in part because digitalization has not come to town in turning it into practice. And then lastly, I'm going to end on a downside note, because I think you're asking, and I think you're correctly challenging, whether there is too much upside in what I'm saying. Clearly, cyber fraud in many different shapes and forms have accelerated enormously over the last 10 years, from identity fraud to any number of ways in which citizens, as users of financial services, as spenders of money, can be fleeced illegally or otherwise. And so clearly there is a role, and a very important role, for policy regulation and standards. There is a role for education, both at the individual level and the collective level. And these things, you know, are never perfect, but need to be invested in for the task force's vision, if you like, as to how to harness digitalization to be effectively realized.
Simon, thanks for that. And you know, carrying through on your last point, we've come from really trying to embed a mindset of protect your savings to really moving, or through this, asking to move to a mindset of release your savings toward income generation. I don't want to say wealth generation, right? But income generation. And I think that's really powerful for the poor. So, you know, any program that allows the poor to invest for a return and brings them income generation, you know, how do we expand the purse, not how do we just guard or protect the purse, is, you know, I think is the right direction. And in your last point, you know, when you mentioned education, it's like what I've seen and what I've studied in China, they did it really well, right? They did mass literacy, digital literacy, investment literacy, and literacy at the levels that the poor could understand. Even in SME financing, the amount of empowerment that they did through digital tools, from training to trade training, let alone training on how to gain access to financing for SMEs, etc. It's just astronomical. And that's something that we would also have to do here. The more that we move to digital financing, the more, you know, the more we'd have to think more creatively around financial literacy training, especially for the poor?
So I don't think that's a question. I think it's self-evidently true. Yeah, but I'm going to put a couple of kind of riders into the game, because otherwise one makes assumptions about the illiteracy and incapability of poor people that are perhaps not always entirely well placed. She heads off at 5 in the morning. She's on the back of a truck, as she hits the traffic light, on her way into Nairobi. She opens up her mobile device and borrows $30. She arrives in town. She uses the $30 to buy her product. She sells the product during the day, and on the way back home that evening in some other truck, she pays the $30 back, and she does that every day. If I had asked you, or indeed if you had asked me, 10 years ago, is that science fiction? We probably would have said yes. And so I think we should not cast the poor as illiterate, but the poor as functionally literate. That as those skills become relevant and acquirable and have immediate, functional and value implications for what they do on a day-to-day basis, people tend to learn much faster, actually, irrespective of whether they're poor or rich. Whereas I think our sort of middle-class imagination, if you like, if I can put it that way, of sort of financial literacy education, which is a far more kind of top-down model, it perhaps, is not well suited to what's going on. I would also point to a remarkable difference, of course, across generations, and I don't need to drill into that in any detail, but if I look at the way in which finance is also gamified increasingly across multiple platforms, and the way younger people, of course, are in danger of sort of gambling addiction, but at the same time are able to understand and work with finance in new and extraordinary ways. I would probably conclude that I'm the person who is well behind the line, because I'm now of the wrong generation. So maybe the landing on this point, and it's the landing of the task force as well, is that we don't argue that digitalization can deliver this. We argue that there are these extraordinary opportunities that digitalization can deliver against, but that the choice, as it says in the movie at the beginning, the choice is ours. We can choose to allow digitalization to accelerate illicit financial flows, by perpetuating the incompetence and lack of capacity of regulators. Or we can choose to ensure that digitalization significantly reduces illicit financial flows by harnessing the ability to trace more effectively financial flows through the financial system more effectively. I think in every single area we look at in the digitalization space, there are potential ghastly outcomes as well as potentially quite extraordinary ones. And so ultimately, which way it goes is a function of how we as societies, it always comes back to the same thing. It doesn't really ever change how we as societies harness this digitalization, for or against us.
Simon, Chris Wolf raises a good question in the last 12 minutes that we have here. So what next? So the report has come out, and the launch, I think, was around a month ago or so, wasn't it?
Yeah.
And there is now this campaign associated with the report. Does the UN have any projects, or what is the next steps? Or, I mean, is the UN going to drive a stream of projects to implement the recommendations in this report, or are you going to rely on member states? What's the plan now that this report is out?
So I guess as a non-UN person drafted in to run this task force for the Secretary General, I would probably start slightly irreverently by saying that the keystone to change does not lie with the UN. I think the UN has some potential roles it can play and can make a significant difference in some countries. So, for example, in Bangladesh, as part of the task force, we have advanced exactly one of these large-scale digital savings initiatives to experiment in moving micro savings into long-term infrastructure investment. That has involved different parts of the UN, the Prime Minister's Office of Bangladesh, bKash, the dominant platform, payments platform in Bangladesh, and others. In other cases, such as an initiative that has spun off from the task force in Zimbabwe, led by the CEO of EcoCash, Natalie Jabungwe. They have produced the world's first stock exchange that does due diligence and credit ratings purely on the back of payments data. Yeah, so again, breaking through from the payment space, not just into the lending area, but into the equity and debt area, historically by far the most difficult space for most LDCs to deliver against. You know, did this involve the UN? Well, not really directly. Actually, what we're really involved was Brad Kutsayama from IEX on the task force, Natalie Jabungwe, who sat on the task force, getting together and talking about it, and then making it happen on the ground. So I guess the task force provided lunch at some point. But actually, I joke, you know, there are parts of the UN, such as the UN CDF, the Capital Development Forum, that has played a role in helping that work move forward. But I think it illustrates how a combination of market actors, some incumbent, some new, regulators often, public policy makers, you know, international organizations, you know, can help to advance different pieces of the puzzle. In 10 years, or maybe 5 years, you know, I would stake, you know, a reasonable reputational money, will be talking very differently about how domestic savings flows through financial and capital markets into long-term investment products. Yeah, so I think in part what the task force is illuminating is not something that is infeasible. It's simply we're highlighting the scale of the opportunity fairly early in the innovation curve. In 10 years, you know, we will look back at what Zimbabwe of all countries, given the state of its economy, has innovated in the stock exchange space, and wonder, how is it really possible that the New York Stock Exchange emulated Zimbabwe in developing new approaches to driving due diligence and credit rating? So I think the way in which change happens at scale is not by somebody doing a project. The way in which we know scale happens in high complexity systems, yeah, is far more like a viral model. Yeah, that illustrations, small scale, begin to happen, but they don't become replicated like some development project. It's more that they become known and understood, and sort of copied obliquely, orthogonally, yeah, and that the narratives around these areas begin to crowd in many new innovations and approaches. So I have no fear about the implementation of the task force's action agenda, because it's not a programmatic agenda to action. It's the way in which we believe a high complexity system can shift in many different respects and with many different actors, how financing can flow effectively.
Simon, I just want to check that that answered Chris's question. Chris, I brought you into the room. All good? Any more?
Sure. Yeah. Thank you for answering that. And maybe I would seem to challenge some of that assumption, I guess that it's going to happen naturally, as opposed to having somebody centrally pushing on trying to get these financial mechanisms to link to the SDGs and advance the SDGs within a 10-year period. It seems like we benefit from somebody trying to push on that centrally, although realizing most of the work happens outside, that for example, private sector players are going to be the ones that actually create the systems to do this. That'd be another assumption of mine. But so thank you. I think you answered the question, and I push back thinking I hope somebody does try to advance these ideas systematically.
Chris, I mean, I think, you know, maybe maybe Gavin, it's a subject for another session, but I think we understand much more than we did do about how to nudge complex systems in the right direction. And it's quite rare, yeah, that top-down approaches have the intended effects. They can do. So when, you know, when Professor Ndungu, who was the previous governor of the Central Bank of Kenya, kind of chose to unlock the doors and allow non-banking institutions to do finance work inside the system, unlike what happened in South Africa, you know, there was a moment of sort of terrorizing mess, complexity, instability, volatility, you know, and arguably, you know, we could probably look back and agree that it was the right way to go. But remember, Ndungu didn't make it happen. It wasn't top down like a policy or regulation that said, you know, thou shalt do this. It was more opening the possibility of innovation to break through many incumbent barriers and experiment to scale. And it seems to me that's not always the answer. Certainly addressing fraud and cybercrime requires a more centralized approach. But it seems to me in many instances, those that we have historically thought should have a top-down approach, you know, are increasingly kind of needing to take a more enabling approach to allow these things to happen. Anyway, longer conversation, as you say.
Mm-hmm. Thanks, Chris, and thanks, Simon. I'm going to call it there. Simon, thank you so much. As I mentioned at the beginning of the call, we will load this webinar and links to the report out there. Simon, I'm with Chris that I hope that there is, you know, some level of kindling, you know, at least of projects, or some level of push if we don't see the market pick up these ideas as fast as we'd like. But I just want to thank you for your time today and for the presentation and for spending time with our alumni and our students.
Pleasure is all mine. Much appreciated for setting this up. And please, for those who want more information than I've been able to provide, I think as Dugu put in the chat line, have a look at our website, www.digitalfinancingtaskforce.org. It also has a link to the video that we showed at the beginning and many other resources that you can draw down.
I've shared that link there again.
Brilliant. Thanks a lot.
Thank you, everyone. Thanks for joining today.
Thank you very much. Thank you.
Bye-bye.
Thank you, Gavin. Thank you, everyone. Bye-bye.